for today's video, we're going to discuss about debits and credits. Accounting is based on double entry system, which means the dual effect of a business transaction is recorded. Each transaction affects at least two accounts. The total debits for a transaction must be always equal the total credits. So, I prepared an example of financial transaction worksheet. We should know that the total of the assets should be balanced with the total of the liabilities and the equity. Like this, for example, 350,000 is balanced with 350,000 in the equity. That is also how a double entry system works. It is not allowed that only one account is affected by the transaction. It should be always two accounts that is affected, and the figure of total debit should be always equal to total credits. Account may be defined as a detailed record of the increases, decreases, and the balance of each element that appears in an entity's financial statements. So here's the example of account. Our first account title here is the cash. So according to this, detailed record of the increases, decreases, and the balance of each element appears in an entity's financial statements. So as you can see, in this portion, we can see the increase, decrease, and the balance of the particular account title, which is the cash. An account is debited when an amount is entered on the left side of the account and credited on the right side. This is the figure of account, which we call the T account. T account is the simplest representation of account. We called it T account because of its figure that is similar to letter T. So, if the account is entered on the left side, then it is debited. And if the account is entered on the right side, then it is credited. For further discussion of debits and credits, let's go back to the basic accounting model. The assets equals liabilities plus owner's equity. Let's make this basic accounting model a single T account. And this equal sign will be the one that separate the two. It means if you put a figure on the left side of the T account, it is debited. So let's put debit here. There. Next, credited on the right side. So this is where you will put credit. This means that the normal balance of the assets is debit and the normal balance of liabilities and owner's equity is credit. However, in general, owner's equity is credit, but it has composition that we should consider, like the transaction that affects the owner's equity such as investments, withdrawals, revenues, and expenses. So these are the transactions that affects the owner's equity: the investment, revenues, expenses, withdrawals. With this, we can expand the basic accounting model. So in debit, we'll have the assets. Then in credit, we will have the liabilities. The liabilities plus owner's equity plus revenue minus the expenses and minus the withdrawals. For mastering the debits and credits, the expanded basic accounting model with different signs is inconvenient. So for the sake of easier mastering, we will transpose the expenses and withdrawals. Since expenses and withdrawals has negative signs, if we will transpose them to the left side, it will become positive. So also we will put the assets. Then, withdrawals plus expenses plus assets equals liabilities, owner's equity, and plus the revenue. So now, all of them have the same operation. The normal balance of withdrawals, expenses, and assets is debit, while the liabilities, owner's equity, and revenue is credit. Then, we will create a code so that it will be easier to remember. So, we all know that the other terms for withdrawals is drawing, so we can use the letter D, E for expenses, A for assets, L for liabilities, E for owner's equity because we can also call the owner's equity an equity, then R for revenue. So we use the first letters of the accounts. So now we have the D, E, A, L, E, R. Now we have the magic word dealer. So now, what do you think is the meaning of this figure? For the debit side, we have the D, the drawings or withdrawals, expenses, and assets. Increases in drawings or withdrawals, expenses, and assets are recorded as debits, while decreases in drawings, expenses, assets are recorded as credits. The normal balance of the drawings, expenses, and assets is debit, while the liabilities, equity, and revenue, their normal balance is credit. So, increases in liability, equity, and revenue are recorded as credits, while the decreases in liability, equity, and revenue are recorded as debits. Therefore, every increase in these accounts, it will be recorded as debits, while every decreases will be recorded as credits. In these accounts, every increases, it will be recorded as credits, while the decreases will be recorded as debits. So in order to remember it easily, we can just remember the magic word dealer. For the next video, we will discuss on how to record the transactions using the accounts.